So what is an SMSF? Well, the name says it itself. It's a self-managed super fund where you manage your own assets within your super. It's more for your seasoned investors that want to take more control of their own assets, which is essentially their retirement planning and the retirement fund for the future. So what can you actually invest in your SMSF? Well, you can actually invest in stocks, term deposits, or even ETFs, or even properties, or even a mixture of everything. Good day everyone, I'm your host Tony Xia and thanks for joining me in another episode of the Mortgage Chat. Today I just want to talk about the basics of an SMSF, what it is and how you can use it as a vehicle to invest. So what is an SMSF? Well, the name says it itself. It's a self-managed super fund where you manage your own assets within your super. So if you don't have a self-managed super fund, it's more than likely your employer is actually contributing your super into the industry super fund of your choice. Call it Sun Super, Australian Super, Hester, whatever you want to call it, okay, where they manage your investments. Now, a self-managed super fund is something that you manage yourself, okay? So you'll have a self-managed super fund, call it ABC self-managed super fund. Now, if you're more of a seasoned investor and want to take more control of your own super, you will most likely use something what you call a self-managed super fund, where you want to invest in whatever you want to invest in, what allocations you want to invest in. Doesn't matter if it's stocks, ETF, term deposits, properties, or even a mixture of everything. Okay, now, but today I want to explain to you how you can invest in property via your SMSF. So before I go any further, this is not financial advice. This is just a guide in telling you how you can invest in property in SMSF. So if you have no bloody idea in how to invest in stocks or invest in properties, I suggest you do not open up an SMSF. And again, this is not financial advice. This is just a guide in how to invest in property via your SMSF. And before all you financial planners out there jumping up and chucking a stink, I'm not telling people that they should start investing in properties via SMSF. I'm not saying property is better than stocks. I'm just giving you a guide in how to invest in property via SMSF. The first thing that I want to bring up is, why does people want to set up an SMSF? It's more for your seasoned investors that want to take more control of their own assets, which is essentially their retirement planning and the retirement fund for the future. So instead of letting, CBAS, Hester, Australian Super, whatever industry super fund you guys are using, taking control of where to invest the stocks, you as the beneficiaries of your SMSF have control of that, and you can decide where to invest that money. So it's essentially having more control of what you want to do with your own super contributions. So what can you actually invest in your SMSF? Well, you can actually invest in stocks, term deposits, or even ETFs, or even properties, or even a mixture of everything. You actually have the ability to invest in whatever you want, as long as it meets the guidelines. But today, the sole purpose of this is how we can invest in property via your SMSF. So why did I want to do this podcast today about purchasing a property via SMSF? Is because a lot of your seasoned investors are actually jumping on setting up SMSF to buy properties, because they've actually been seeing more value in purchasing and investing in property via SMSF than keeping the money in stocks within your industry super fund, essentially. Right? So we've probably seen good growth in areas like, call it WA, South Australia, Queensland, or even Tassie the last 2-3 years, where they've actually been growing substantially faster than stocks, etc. So it's probably one of the reasons why SMSF has been so popular the last few years, is because they see better opportunities in property rather than stocks. So you're probably asking, why do people want to buy property under SMSF? Well, that's because maybe they prefer property over stocks and they're more comfortable in investing in properties rather than stocks, because stock market is just too complicated these days. And they have more knowledge investing in property because it's a lot easier for them to research in certain areas, vacancy rates, growth rates, what infrastructure is in place, etc. And the second thing is, they probably find more value investing in property rather than stocks, because the last few years, the property prices have actually boomed up, right? So call it Queensland, WA, South Australia, they've probably been growing by about 15 to 20%. And one of the main reasons is you can actually borrow against your SMSF and purchase a higher value asset. And I'll give you a quick example on how this is done. So guys, if you're only listening to this podcast right now, please just jump on YouTube and look at this section of the video because I'm actually showing you a quick demonstration. What is the borrowing power on certain income and what you can do with a certain super balance. Okay? All right, everyone. So as you can see here on my whiteboard, let's just assume we have a couple right here. Okay? They're on $85,000 each, full-time workers, employees paying 11.5% super contribution every year. That equates to $9,775,000 each per year. All right, and let's assume the property they want to buy receives a rental income of $525 per week. All right, at 7.74% principal and interest, their borrowing power is actually $400,000 as a loan. All right, and let's assume the super balance is combined super balance, by the way, is $145,000. All right, now let's work backwards. They want to purchase something for $500,000, and this is probably the max they can do. If you see my board right here, with the super balance and the borrowing power, they can actually purchase something for $500,000. And let me break it down for you right now. So the purchase price is $500,000, and let's assume they're purchasing in Queensland. All right, so let's just assume the setup cost is around $5,000, which includes the trust and the corporate trustee and all your bare trusts. All right, so let's just assume it's $5,000, and let's say deposit for $500,000 property is 20%, which is $100,000. And let's assume, right, the lender we're going to requires a 5% liquidity. And what I mean by that is they want you to have at least 5% of the loan amount, which is $20,000, in your super fund as stocks, cash, etc. Okay. And stamp duty in Queensland for a $500,000 property, it's around $17,000. Let's just jump it up to $20,000 to include solicitor costs as well. Okay, for two clients, that's on $85,000 each, with a super contribution of $9,775 and a $525 rental income per week. Their borrowing power is $400,000. With a super balance of $145,000, they can actually purchase something for $500,000 in Queensland. And that's a quick breakdown with what we've done with one of our clients recently with the SMSF. So why did these couples want to set up an SMSF, right? And they go to, look, Tony, I can leave my $145,000 in my super fund and earn my 8, 9, 10% every year. Not a problem, okay? But they go to, Tony, if I can invest that money and leverage off that super balance and buy something for $500,000 and that property grows by 15, 20% every year, well, that return is substantially better than the stock market. Just an FYI, we didn't do the direct comparison in regards to what's better, investing in stocks or property. They've done it themselves, and that's what they said to us. Okay, so this is not financial advice, and I'm not doing any direct comparisons myself. All right. So as you can see here, you don't actually need a big super balance or earning substantial amount of money to buy a property under the SMSF. It can be done with an average income with an average super balance. All right. So guys, just remember, when you want to invest in property and get a loan via SMSF, the rates are going to be a little bit higher by around 0.8 to 1%. All right. So just be wary of that when you work out your cash flow. Now, one thing that people don't understand when setting up an SMSF is the cost involved with it. Okay, so like I just told you, there's a one-off setup cost, which generally is around $5,000 at start. But every year after that, you'll actually have to do financials for the SMSF. Okay, not just the financials, but you have to pay ASIC fees. And I've seen it cost anywhere between $2,000 all the way up to $3,500 just to do the financials and just for the ASIC registration for the corporate trustee and the trust. So guys, this was just a quick overview on what an SMSF is and how you can borrow and leverage and buy a property via SMSF. Now again, I'm not saying I prefer stocks or property over one another. This was just a quick guide in what you can do. So everyone, I hope you liked this video. Please give it a like, give this channel a follow. Thanks for joining me in another episode of the Mortgage Chat, and I hope to see you next time.